So as Amit has given a summary of what this budget entails, so I would like to present my views on the corporate tax proposals which have been proposed in this budget. So I think the first, which is one of the, I think it is kind of a clarificatory amendment in the sense that since goodwill was included in 2021, that it would be an asset for which is generally a self-generated one, and the cost for such an asset would be considered nil while calculating the capital gains. Uh, Besides it all, the same rationale also apply to other intangibles like brands and trademark, but the word intangible asset itself was missing from there. And I think what they've done is that they have included the word intangible assets and other rights in case of profession. So what this will do is that it will enlarge the scope of the intangible assets and any kind of intangible which is kind of self-generated. For example, uh, customer contracts, human resources, as some of the organizations uh, have been showing these as intangibles in their books of accounts. So I think this will impact these kind of assets. And besides, I think the one concern that could be raised in this case is that the other intangible assets have not been defined here. So what all would encompass this definition of intangible asset? For example, if you develop a software in-house, or it is also kind of a self-generated asset, those would that software also be considered in this class? I think some clarification are wanting on this, and I hope that once this get passed, I think there will be suitable clarifications in time. Next slide. Yeah, this is the other important amendment which affects MSMEs, and I would say the industry in large, because uh, here it says that the anyways the you need to pay the SMS MSMEs in within 15 or 45 days, as the case may be. Uh, so I think prima facie it will help as MSMEs, that it will help them realize their payments on time. However, there could be a flip side, that the organization, the industries that which may have been working with MSMEs but may not be following these kind of cycles, or may find these kind of cycles following a bit hard. Uh, they may be discouraged to work with MSMEs. So I think uh, the provision is noble in the sense that uh, it basically intends to help the MSMEs, but I think the time will tell that what impact it would create in the long run. Next slide. Yeah. Uh, yeah, I think this is an amendment which has been done in alignment with 194R in section 28. Uh, I think the benefits and purposes are already included in the definition of business income under section 28 clause 4. However, when 194I came through various circulars, its scope was being enlarged from time to time, where once it said that it would include consideration as well as cash in kind, or partly in cash and or in kind. So, however, the provision itself never mentioned those kind of wording. So, I think what this will do is that I think it will tend to reduce the scope of litigations if there are any, because it was possible to context that 194R is basically a machinery provision and not a charging provision. So it cannot enlarge the scope of an income, which is itself not present in section 28 clause 4. Yeah, the other important amendment relates to preliminary expenses primarily relating to R&D. For various R&D expenses, the organizations or companies are required to get approval from board. I think that requirement has been done away with, but what has been provided is that they will need to file certain form, which would be filed, which would be prescribed later. All in all, I think it is a welcome development. I think this will uh, reduce the compliance or the approval requirement on the part of the organizations which are into R&D, and will certainly help in easing out the process of getting the deduction. Next slide. Okay. So I think the other provision relates to the taxation of online games. Uh, what is I think it has been introduced as a separate category now. Earlier, it was already included in 115 BB, but now the online gaming, the net winnings from online gaming, having made a separate category, though it still has the same kind of tax rate that is applicable to it. And similarly, the withholding provisions have been amended accordingly, where a separate carve out has been created in the form of Section 194BA, where it says that the net winnings at the around the end of the financial year would be calculated, and the online gaming companies would need to deduct TDS at the rate of 30% on those amounts. And it has also been provided that if any amount has been withdrawn during the year, the same rate of withholding would apply on withdrawal itself. So it has been also clarified in the provision itself very clearly that this would apply only on the net winnings and not the gross amount. So for example, if somebody has invested, let's say paid around 1,000 rupees when by logging into Dream 11, and the person is able to win around 1,500 rupees. So the provision clearly states that the 30% TDS would be calculated on the winning of 500 rupees only, and not the whole amount of 1,500 rupees. And I think there is one more complication which has been which has been tried that to remove being here, is that the definition of aggregate transaction has been amended, or in 194 BB, where it says that these winnings would be subject to TDS irrespective of any threshold. So in vis-a-vis 194B, where generally the withholding would apply if the amount exceeds 10,000 rupees. So now that kind of relaxation of the monetary limit would not be available in case of winnings from the online games. And I think this would somehow create compliance burden for the gaming companies. And lately we have been seeing that all these online business models, be it cryptocurrency trading, or be it online gamings or any other similar models, I think from time to time these have been taken into tax net. And because I think the income tax department is realizing that people are spending their time and their money on an increasing basis on these kind of portals. So I think it is a good idea to tax these kind of transactions as well, and mostly these kind of transactions would go unreported. So I think from tax augmentation mechanism, I think it is a very good move. Yeah. So this is regarding the non-filers. I think in 2021, several amendments, several new provisions are introduced in the form of TDS and TCS at several places, that the non-filers would be subject to certain withholding on any of their receipts. However, the provision failed to account for the scenarios where certain taxpayers may not be required to file tax return at all, particularly the non-residents and the foreign companies. So typically, for example, Section 115 capital A, which provides for taxation of royalty, fees for technical service, and interest and dividends for foreign entities and non-residents. 115A itself provides a carve out that if the withholding has been made equivalent to the tax rate provided under 115 capital A, and the foreign entity or the non-resident doesn't have any other income worth reporting in India, So in those cases, those non-residents of foreign companies would not be required to file any tax return in India. So I think this has been rationalized now, and it has been provided from uh, 1st April 2023 that such kind of entities or taxpayers would not be required to file any tax return in India. However, this still remains that if the foreign company has a permanent establishment, it will continue to be main tax in India, and it will be subject to the requirement of tax return. And if it is not filed, then it would be subject to these TDS and TCS provisions. Next slide. Yeah. So I think this relates to the TDS withholding required for the non-residents under Section 196 Capital A, where any income from the units of mutual fund is subject to a TDS at the rate of 20%. It is also provided that if the person in this case doesn't have a PAN in India, then the withholding can be on a at least on a at least will be a 20% basis. However, since there have been several relaxation introduced in the past in Section 206 AA, where the non-residents are able to furnish TRC, they are able to claim the tax rate under the tax treaty. So I think the same relaxation has been introduced here, where it has been provided that if the non-residents are able to produce the TRC in such cases, they would not be required to file. They can certainly get the benefit of tax treaty and claim a lower rate of 10% or 15% as the case may be, which is mentioned in the tax treaty. Next slide. Yeah, so I think this is also a kind of a rationalization provision where the withdrawal from the EPF by any employees is subject to tax at maximum marginal rate of around 30%. If the person is not able to furnish his or her PAN. Uh, this is something which was contradiction to 206 AA, which provided that if any payer is not able to, if any payee is not able to provide the PAN, then the withholding would be at a 20% or the higher rate, whichever is applicable. Yeah, so I think this has been rationalized now that now it is provided that if the PAN is not provided, then uh, the withholding would be governed by the provision of 206 AA, and the minimum withholding would be at the rate of 20% instead of maximum marginal rate. Uh, yeah, so this relates to the interest on debentures which is earned by the residents in India. So the provision provides that if somebody holds any listed securities in dematerialized form and earns interest on the same, there was no TDS on those interest incomes. So I think what was happening was that some of those incomes were not being reported, and accordingly, taxes were not paid on those incomes. So now this exemption from TDS has been removed. So what will happen is that even if one is not able to, if somebody is getting interest from a listed security which are in demat form, the TDS provision would apply in those cases as well. Next slide. Yeah, so I think these are the proposals which will impact the HNIs and other residents as well who have been availing LRS scheme for different purposes. Barring two scenarios where the remittance is made for overseas tour or for any other purposes, the TCS rate has been increased from 5% to 20%, which is kind of surprising because when these TCS provisions were introduced in 2020, the language of the memorandum clearly specified that the purpose of this TCS was to widen and deepen the tax net which effectively means that it was basically to track the transaction and it was not a tax augmentation measure. However, increasing the, I mean, and it was, the object was perfectly achievable with this 5% TCS rate as well. So, but now this TCS has been increased to 5% on to 20%. So, though it is creditable, but it will be a severe cash flow hit at the time of remittance. And I think a relook on this particular provision is, I think, required on the part of the finance minister or the honorable finance minister. And I think what will happen is that the foreign travel may get impacted due to this immediate hit. Uh, However, the people who have been booking these tours from the Indian tour operators, I think they would not get impacted, because if they're buying the tours from the Indian residents here, the Indian tour operators, they would not be subject to this TCS provision of 20%. And when the tour operator in India books the tour from overseas or hotel from overseas, those remittance are not under LRS routes. So I think the requirement of TCS would not apply there. So I think this is one route where the overseas tour transactions would not get impacted by these TCS provisions. Next slide. Yeah. So I think some changes have been produced in the presumptive taxation schemes. Typically for businesses, the earlier limit was 2 crore rupees, and for professionals it was 50 lakh rupees, and it has been increased to 3 crores and 75 lakhs respectively. And the condition of that a cash receipt should not exceed 5% is already there. And it has also been mentioned that uh, people opting for the presumptive scheme would not be subject to the provisions of tax audit. So I think this is welcome amendment for small professionals and small businesses. Besides the other presumptive schemes like 44B and 44 triple B for specific businesses like civil construction, turnkey, extraction of mineral oils for foreign companies, uh, there is a change has been, I mean, some amendment have been introduced for them, stating uh, that if they opt for a presumptive scheme for 10% taxation in a particular year, they would not be able to carry forward the losses of earlier years to the from the year they avail this kind of provision. Ishu, can you go back to the previous slide? I'm not finished that yet. Yeah, thank you.
I think what was happening was people were actually in 1 year using the normal provisions, wherever they made losses, they were using the normal provisions, and whenever they were making profits, they used the presumptive taxation scheme of and paying taxes at 10%, and the losses were carry forward. So they have said that you can't do this, you can't just keep flipping. So that's what they have sought to stop. And I think that's something which is completely logical.
Okay. Ishu, next slide. Yeah. So there have been several changes which have been introduced for cooperative societies. I think one of the most important changes that any cooperative society which is engaged in manufacturing, though similar to the scheme which is already available to the companies where they set up their manufacturing operations within a particular time frame. I think the same facility has been introduced for them, that if these cooperative societies are also engaged in manufacturing activities, they would be subject to a tax rate of 15% if the operations are set up to 31st March 2024. I think this is in line with the amendment, I mean, the provision which was introduced last year, where the scheme of 22% taxation was introduced for any other businesses for cooperative societies. So I think this will facilitate manufacturing by these societies as well, and certainly help them in their profitability. However, what is surprising is that such a relaxations are not available, still yet not available to LLPs, and which is, I think, gives the message that LLPs still remain kind of discouraged there because they anyways are subject to a higher tax rate of 30%. Besides, there are other provisions which have been introduced for primary cooperatives. For example, the withdrawal of, I mean, the cash limit for loans taken and loans repaid has been increased from 20,000 to 2 lakh rupees. So most of these cooperatives would be working in unorganized sector. So there is a possibility that they may be dealing with the people that who may not have access to banking channels or may not be uh, used to used to have those banking channels used on an everyday basis. So I think this will also help in carrying out their operations smoothly to some extent. Besides, the cash withdrawal limit for these cooperative societies has also been amended, and the limit has been increased from 1 crore to 3 crores. Next slide. Yeah. So from here itself, I think I will pass on to my colleague Yishu, who will deliberate on the amendments which have been made with regard to the personal taxation. Thank you very much.
Sorry,
Yeah,
just one quick thing before issue starts. So there is a clear trend that the government is not going to favor LLPs, and if they are operating entities, I think LLPs don't offer much advantages from a tax perspective. From a holdco perspective, yes, LLPs would still work, but we have been the industry has been asking the government every year, making representations to get this tax rate reduced for LLPs. They have bought it for cooperatives, not for LLPs. So I think here the trend is very clear that LLPs would be discouraged and they are not viewed as very investor friendly by the government. Just like in the personal tax regime, now there's a clear trend and clear push towards the new regime. Sorry about this. So over to you, Ishu.
yeah. Thank you so much.